Good morning and happy Monday to you. You're watching All You Need to Know on Bloomberg Quint Live and I'm Alex Matthew. First, the headlines. Stocks in Asia are off to a mixed start. Investors now shift focus to the much-awaited Trump-Xi meet at the G20 meeting later this week. Oil prices posted their best weekly gains since 2016 as geopolitical tensions between the US and Iran rise. And speaking of those tensions, US President Donald Trump has said that he will impose heavy sanctions on Iran after a US drone was shot down by the Islamic Nation. IndusInd Bank promoters will infuse 2,700 crore rupees into the private lender through a warrants issue in order to raise the promoter shareholding back to 15% after the merger with Bharat Financial. That's a PTI report. And India Mart's 475 crore IPO opens for subscription today. Promoters will offload their stake via an offer for sale. Let's talk about the US markets now. It was a subdued day of trade on Friday on Wall Street, with benchmark indices ending just a tad lower. However, all three benchmarks recorded their third straight weekly gain, with gains of 2 to 3%. Rising geopolitical tensions between the US and Iran were some of the key factors behind the risk-off sentiment. Ranita Young of Bloomberg News brings you Friday's Wall Street action in this report.
U.S. stocks closed mixed on Friday after climbing to record highs as the S&P 500 ended its third straight week higher. This all happened as Iran began to continue to have tensions with the United States, and that actually cooled an earlier on risk rally sparked by a dovish global central bank tilt. Meanwhile, WTI crude oil saw its biggest weekly increase since 2016 after U.S. President Donald Trump said he had approved strikes against Iran in retaliation to Iran shooting down a U.S. drone earlier in the week. Now, later in the trading session, U.S. President Donald Trump was said to have canceled those strikes. However, a possible rift still continues there. We also saw in the oil space a Philadelphia refinery explosion, which was so hot it was seen from outer space. This impacted WTI crude oil prices as well. And gold is still trading at $1,400 an ounce. That's a clear sign that there's still some concern in markets as investors seek to store the value of their assets. Meanwhile, something interesting happened in companies today. Toys R Us, which reportedly went out of business, or actually did go out of business last year, is back, and it looks like kids may not have to go a Christmas without Toys R Us after all. It's saying that it will open up U.S. stores in 2019. And that's a look at your Friday Wall Street action. In New York, I'm Ranita Young for Bloomberg News.
All right, so clearly there are some worries this morning. Let's take a closer look at the Asian markets. Sophie Kamruddin is joining us live from the studios in Kuala Lumpur. Thanks so much for joining us, Sophie. How's it looking today?
Well, today, Asian stocks are looking mixed, with U.S. futures nudging higher and the yen just holding near a 5-month high. And in the face of this yen strength, Jefferies has downgraded the outlook for Japanese equities, which are swinging this morning and could be set for a second day of declines. And the Kospi has eased some of its earlier advance, but Korean auto players maintaining their rise on a Nikkei news report that the likes of Hyundai Motor and Kia Motors are moving production out of China. Now, elsewhere, the ASX 200 is being led lower by companies that delivered poor earnings, while the Aussie dollar is climbing with yields after RBA Governor Lowe noted the limitations to further monetary policy easing. And checking in on mainland markets, we're seeing the Shanghai Composite come under pressure as stock sentiment worsens. And ahead of the G20 summit, we had Credit Suisse cutting its price target for the index on a softer earnings outlook. And over in Hong Kong today, we are seeing the Hang Seng potentially losing ground. Back to you.
Thanks so much for that, Sophie. Well, let's talk a little bit more about the rising tensions between the US and Iran. US President Donald Trump said that the United States will impose heavy sanctions on Iran as of today. They'll kick in today after he called off proposed airstrikes against Iran at the last minute. Now, despite the rising tensions, the US have said that they are willing to talk with no preconditions. Jody Schneider of Bloomberg News reports.
Well, we don't know a great deal more about them. President Trump foreshadowed them in a tweet where he said there would be these major new sanctions. This is in retaliation for that drone attack, that attack on the Navy drone. And then we heard from Mike Pompeo, as we saw there, the Secretary of State, saying that there would be a significant set of new sanctions against Iran. There's already Iran's economy, 80% of Iran's economy already has sanctions on it. So it's unclear how this would really step up that pressure. But clearly this is the administration's goal in trying to get Iran to end all those tests, anything with nuclear weapons. We've seen in recent days, Iran, or in the past week, Iran said that it will start ramping up that program again if it does not hear from the European countries, which are still in that accord, which the U.S. left a year ago, that they will try to help Iran economically and with trade. So all this is happening at the same time. Mike Pompeo is going to the region this week, and he says he would be willing to talk. The president says he would be willing to talk, but it's unclear how that would happen with this threat of new sanctions.
Jody, the Trump administration has repeatedly said that military action is on the table. So why did President Trump back off from those airstrikes?
Well, he says he backed off because of concerns about who it would have hit and how many people and civilians. He said he has a fondness for the Iranian people. He's known some Iranians in New York. So it sounds like he is making a determination that it would have been worse for him in terms of ratcheting up the tensions. Of course, he says that he made the decision just minutes before this was going to happen, and there's a lot of questions around how that decision was made and how the decision about potential airstrikes was made as well. It's unclear whether there was any consultation with Congress, for instance. So there's a lot of questions there, and I think we're going to be hearing a lot more about those remarks. But President Trump has not wanted military action in the region. Some of his more strident, hawkish advisors have been pushing for that, but he has continually backed off, kind of gone that way, threatened, and then backed off. He prefers the sanctions approach.
Well, that is the headline going into this week as well. Members of the G20 nations will be gathering in Japan's Osaka later this week. But the highlight of that summit will be the meeting between US President Donald Trump and Chinese President Xi Jinping. So what are markets expecting or anticipating from the meet? Enda Karan of Bloomberg News brings you more.
It's a crucial opportunity for both governments to get these trade talks back on track after they collapsed in May. I think that markets are certainly hoping for, at the very least, that the two leaders, Xi and Trump, might agree to extend the trade truce and to get negotiations up and running again. I mean, obviously, expectations for a near-term deal remain somewhat low, but I think economists are hoping that both sides can come together, map out areas where progress can be made, perhaps on the goods deficit, map out perhaps a time frame for progress on areas around market access and the like. Now, the worst case scenario is that the meeting doesn't go well, or that the meeting doesn't happen at all, in which case the expectations would be for the resumption of new trade tariffs and the trade war between the world's two biggest economies. So as G20 summits go, there's a lot riding on the outcome and on the signals from this week's meeting in Osaka.
Well, today marks 3 years of the historic Brexit vote, where citizens of the United Kingdom voted in favour of leaving the European Union. A decision that sent the stock markets into a tizzy and led to then Prime Minister David Cameron's resignation. Theresa May, who was supposed to engineer the exit out of the EU, also lost her chair 3 years later, and a deal has still not taken place. With the race for the next UK Prime Minister down to 2 candidates, what sort of an impact will the appointment have on the equity and currency markets? Well, David Finnerty of Bloomberg News probably has some answers.
Well, I think certainly from a sterling perspective, the odds, if that was going to happen, would be obviously in sterling to grind lower. I think it will grind lower because it's still a few months off. There can always be developments. He has said he will try and negotiate. He's obviously focusing on the Irish backstop, but yet again, the European Union has said that is not up for negotiation. So therefore, it does boil down to, if it comes to a no-deal Brexit, it's not going to be positive for the UK economy. It wouldn't be positive for the European economy either, if we're honest. But certainly from a sterling perspective, you'd expect that to weigh on sterling and push it lower. So I think ahead of that, you wouldn't be surprised if you see this grind lower if the market starts to believe that a no-deal exit is actually the most probable outcome.
Would sterling be spared some of that downside if, for example, we see the margin of victory being smaller? You have said there's still some time until the runoff, and already we're seeing the polls are mixed on him and Jeremy Hunt. And the latest developments right now about police being called because Boris Johnson had an argument with his partner really could send the election anywhere. Anything is possible at the moment.
Yeah, no, absolutely, definitely. I mean, so there are mixed results out of the polls. The key one really is the poll on the Conservatives, because they're the ones who will determine who wins this race off, and he's still ahead in that specific poll. So at the moment, it's positive for him. Certainly the outcome of the police turning up at his home he shares with his partner for a domestic dispute, it looks like, was not a positive because it questions his personality. But as we know in politics, things can be forgotten very quickly if something else develops. So at the moment, he seems to be surviving it, but certainly as it plays out, you never quite know how it will play out, and you may see Jeremy Hunt performing better. If he does, Jeremy Hunt, though, still has the option. He said he'll negotiate, but again, the EU has said the key things that are not up for negotiation is his withdrawal agreement. So then even if he hypothetically won, the question is, will the results still end up being the same? Of that we get to October the 31st, and it's like EU goes, the EU may even go, we don't want another extension because there's no point to another extension. So at the end of the day, no matter who wins, I think certainly if Boris Johnson wins, there's more pressure because there's more probability of a no-deal Brexit. But even if Jeremy Hunt wins, the market still has to consider, really, does that change much? And it's certainly very debatable whether it does or doesn't.
All right, irrespective of what happens, we need to know what's going to happen in the markets today. Agam Vakil is here to tell you all about that and also what's happening in the futures and options space. Agam, well, as of now, absolutely flat, but we all know it. Yeah. Not necessarily how it's going to pan out. So what are we looking at today?
Right. So well, let's start off with the way we saw last week and perhaps Friday. Of course, for now, as Alex has already mentioned, the SGX Nifty futures are flat. But at least last Friday, well, what we saw was, well, a decline in the Nifty, and that actually led to a negative return for the entire week. So we did see some shorts building up. There was a lot of volatility in the broader markets. It may have not reflected last Friday, but on the whole, there certainly was a lot more weakness with the advanced decline ratio moving into the negative. Banking indices did, move and gave us mixed moves. But moving on, when it comes to your ADRs, well, a lot of weakness for now. Dr. Reddy's, HDFC Bank, Wipro, and well, say for something like a Vedanta, along with Infosys, we've seen weakness in general. If your FII's sold stock was 730 crores. Now, it's going to become important as to see whether or not there is a trend where foreign institutions are selling. Domestic institutions, of course, are picking up stock. I reckon doing some discount searching here. But when it comes to your contributors, as far as the Nifty is concerned, well, there were losses across from the financial space. We had HDFC Limited and Kotak Mahindra Bank, TCS and Reliance Industries. And of course, TCS and Reliance are fighting for the largest market cap, position here. So we'll be watching out for that as we move into trade today. And as far as futures and options go, again, there was very little movement in the Nifty futures, considering a less than 1% increase in open interest. And coming down to your Nifty banking futures, about 4% added there. So there was some amount of shorts building in. We do have a 300-point range for now. We are heading into expiry week, and well, there you have it. But we did see a little more writing around the high level calls, such as 11,800, 900, and 12,000 calls. So keep an eye on that. The WIX did rise, and perhaps we could see a little further inch up considering it is expiry. Of course, the Nifty put call ratio came off at around 1.3. Naturally, considering the Nifty also came off to a certain extent. IDBI Bank in generation in the F&O ban, as is the case for Reliance Capital and Reliance Infra. But we do have Jet Airways, which moves back into the ban. And of course, this is the last week for Jet Airways to remain in the futures and options space. Besides that, watching out for Ujjivan Financial, PVR, Coal India. Of course, all of them losing out, a lot of them seeing shorts. And on the unwinding side, we are keeping an eye on Sun TV, Generation making a surprise up move. and of course Reliance Capital along with CG Power. So a whole host of stocks, but again, Alex, it is going to be more about stocks. Of course, the other curious development is Deputy Governor Viral Acharya stepping down. So let's see what kind of impact that has on sentiment.
Yeah, we don't have confirmation on that yet. I don't think there's something on the RBI site yet, but we'll get that. Thanks so much for that, Agam. What Agam was just pointing out is a report in the Business Standard, so we're just waiting for a confirmation from the Reserve Bank of India. We haven't seen any notification on the site yet, but we will keep you posted on that. For now, let's take you through some of the headlines that are being seen across the globe. Basu Keenan of Bloomberg News brings you the first word headlines.
Begin with President Trump, who denies ever threatening to demote Fed Chairman Jerome Powell, but insists he has the right to do so. He repeated his long-running criticism of the Fed chief on NBC's Meet the Press, saying he's not happy with the way interest rate policy has been handled. Trump picked Powell to replace Janet Yellen at the Fed, but has repeatedly attacked him for raising rates too far and too fast. To Turkey now, the lira jumped after Turkish President Erdogan suffered a dramatic election defeat in Istanbul. The vote was a rerun from March after the president contested a narrow loss for his AK party in the race for mayor, but opposition candidate Ekrem İmamoğlu won again by an even bigger margin. Months of political uncertainty have dragged on the lira. In fact, it's lost about 10% of its value against the dollar this year. North Korea has released a photo of what it says is Kim Jong-un reading a letter from President Trump. State media describes the tone of Trump's message as excellent and that Kim would take the content seriously. U.S. Secretary of State Mike Pompeo confirmed that the letter had been sent and said that the Trump administration is ready to restart talks. There has been little contact between the two leaders since they met in Hanoi back in February. And to the UK, the leading Brexit supporter Boris Johnson has repeated his insistence that the UK can and must leave the EU by the end of October. Writing in the Telegraph newspaper, he said the split will happen if he becomes Conservative leader and Prime Minister. Now, his campaign did suffer a bit of a setback over the weekend after police were called to his London home Friday amid reports of a heated argument with his partner. Johnson has so far refused to comment. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, now Finance Minister Nirmala Sitharaman chaired her first meeting as chairperson of the GST Council. Among the key decisions that were taken was the extension of the term of the Anti-Profiteering Authority for a period of 2 years. The other key decision was the extension of the deadline for filing annual GST returns up to the 31st of August. Listen in to what Revenue Secretary Ajay Bhushan Pandey told reporters after the meeting.
Similarly, the decision to extend the date for the annual returns. The last date for filing the annual return was 30th of June 2019. Now, because we had received several representation from the trade and then business that they need some more time because this is the first time they will be filing the returns. So, considering their difficulties, GST Council has extended the date by 2 more months. So now the annual returns will be filed by 30th of August 2019. GST Council has approved electronic invoicing system because electronic invoice system, so today the business has to file returns, also has to upload the details of returns. And thirdly, when the goods are being transported, that time the e-way bills are also e-way bills are to be generated. So effectively, these are the 3 different things which every business has to do. Now with this electronic invoice, which are prevalent, on which we were working for last several months, finally we proposed a system through which the invoice can be generated on a portal, and then that invoice itself can act like a e-way bill, and because it is going to be on the portal, the collection of your invoice can itself become a return. So that is the system. That is the system which we will work on, and GST Council has given in principle approval for this electronic invoicing system.
Onto the primary markets now. India's largest online B2B marketplace, India Mart's IPO opens for subscription today. The promoter will be offloading their stake via an offer for sale. Somit Sarkar is here to take you through the details. Well, Somit, first about the offer and then, of course, what the company does.
Well, the company is looking to raise close to 476 crore rupees by issuing shares at a price band of 970 to 973. That is close to 46 million shares that the company will be issuing. And at the upper end of the price band, that is 973. The company on listing would be valued at close to 2,800 crore rupees. So what is India Mart now? India Mart is the largest online B2B marketplace. It is an aggregator for suppliers and buyers. It has around 60% market share in this online B2B classified space, and its revenue model is based on subscription, which it collects from suppliers and not from buyers. Now, if you see the key suppliers for the company, nearly 9% of its suppliers belong to the construction sector, 8% to clothing, and nearly 7% which cater to vegetable, fruits and other FMCG products. They also have other products like consumer electronics, where nearly 4% of their subscribers are listed, automobile and spa, where nearly 3% of its subscribers are listed. It caters to nearly 54 industries overall. Now, if you see, it also has a pan-India presence now with nearly 49% of its suppliers concentrated on 8 metro cities. Now, the Tier 2 and Tier 3 cities have nearly 27 and 13% of its total supplies, while the remaining 11% belong to the other parts of India. Now, if you see its key performance indicators, the company's registered buyers have increased to nearly 83 million from 27 million 3 years back. Also, its paying suppliers have increased to nearly 130,000 from 72,000. However, the number of paying suppliers to the total number of suppliers continues to remain low for India Mart in FY19 also.
So that's more or less a picture of how the company performs its business and what it does, Somit. But what is the financial picture like, and how are the valuations stacking up?
So I'll start off with the financials first. Now, if you see the company's revenue, it has grown at a CAGR of nearly 30% from FY14 to FY19, and FY19 its total revenue from operations stood at close to 507 crore rupees. And as you can see in the chart, the company has turned operationally profitable only in FY18 with an EBITDA of close to 47 crore, which increased to 82 crore in FY19. So what aided the company operationally? It was the higher revenues and a stable cost in FY18 and FY19 that has led the company to turn operationally profitable. Now, on the cost, the revenue growth for the company was on the back of higher paying subscribers, but on the cost side, if you see, it was the lower employee cost. As you can see, as employee cost has come down from 66% as a percentage of revenue in FY17 to close to 47.5 in FY18 and 45 in FY19. Along with that, the other costs that were lower for the company was the advertising cost, content development cost, and buyer engagement cost. As you can see in this chart, the company's advertisement cost has come down to nearly 0.4% and 0.8% in FY19 and FY18. Along with that, content development and buyer engagement cost has also reduced for the company in FY18 and FY19, which led the company to profitability in these 2 years. Now, if you see on the balance sheet side, if the company gets nearly 1/3 of its subscription on a multi-year basis. So a deferred revenue is a good indicator for the near-term revenue growth of the company. Now, deferred revenue as of FY19 or advances from customers stood at close to 586 crore rupees, and it has grown very strong from nearly 122.5 crore in FY14. It has increased to nearly 586 crore rupees in FY19, and going forward, this deferred revenue plus a digitization would aid the company's growth. Now, on the peer side, if you see, the company has no listed peer in India, but on the unlisted side, it has Trade India and Alibaba, which are the direct competition for the company. Now, the indirect competition for the company are search engines like Just Dial, Google, and other search engines on the indirect side, while on the traditional side, there are trade shows, trade magazines, yellow pages, classified and outdoor advertisement, which also poses as a competition for India Mart going forward. Now, on the valuation side, if you see, on FY19 basis, according to our calculation, the price to earnings for India Mart stands at close to 140. The market capitalization to sales stands at 5.5. and the EV to EBITDA stands at 25.7. However, according to Haitong, assuming a 20% revenue growth rate over the next 2 years and an EBITDA margin of 17%, the issue price indicates an EV to EBITDA of close to 17 times for FY21. That is according to Haitong. But for FY19, the EV to EBITDA for the company on the issue price of 973 is close to 25.7 times.
Thanks so much for that, Somit. All right, let's turn now to the stocks that you have to watch out for in trade today. Mishika Parak is joining in with all the stocks in the news. Good morning, Mishika. What's on your list today?
Good morning, Alex. There are a number of stocks making news today. The first one being IndusInd Bank. The promoters will pump another 2,700 crore rupees into the bank through a warrant issue to ramp up the promoters' holdings after the merger of Bharat Financial Inclusion, as reported by PTI. Now, the money is being infused to get their stake back up to 15%, and a fourth of the money will come immediately after the merger, while the rest will come over the next 18 months. Then we have Jain Irrigation. Fitch has downgraded the long-term issuer default rating to B- from B+ and placed on rating watch negative due to weak operating performance, a stretched balance sheet, and aggressive growth pursued by the management. Then we have Glenmark. The US FDA has issued a complete response letter regarding the new drug application of Ryaltris. The CRL cites deficiencies in the drug master file pertaining to one of the active pharmaceutical ingredients and in the manufacturing facilities. The company says that the CRL does not specify any deficiencies with the clinical data supporting the new drug application for Ryaltris, and the company sees a resolution in the next 6 to 9 months. We also have Reliance Infra. India Ratings and Research downgrades the long and short-term credit ratings to default, and downgrade was due to the ongoing delays in the debt servicing and non-cooperation from the issuer. Dr. Reddy's has been issued Form 483 with 2 observations for their Vizag SEZ Plant 1 and Plant 2 at Duvara. And lastly, we have BAIL. They're going to make emission control equipment for NTPC unit in a deal of worth 840 crore rupees. With this order, the company is presently executing flue gas desulfurization systems for 23 units of NTPC and its joint ventures.
Thanks so much for that, Mishika. Now, 8 million metric tons of plastic enters the ocean every year, turning our planet into a wasteland. And it is high time that we take action. Here's why.
Ocean plastic pollution really is a problem as large as the ocean itself. We know that roughly 8 million metric tons of plastic enter the ocean each year from land. And to put that into perspective, that is roughly a 1 New York City dump truck full of plastic emptying into the ocean every minute of every day for an entire year. Many of the characteristics that make plastic so desirable for use in everyday life, it being very durable, it being very rigid, resistant to temperature, are the same reasons why it persists so long in the ocean and why when it does come into encounter with animals, it has very real impacts. We know that more than 800 marine species have now been documented to be affected by plastics, and that really ranges from the smallest organisms in our ocean, the building blocks of the food chain, up to things like shellfish, to fish, sea turtles, seabirds, all the way up to the iconic great whales like humpbacks and the blue whale. With sea turtles, their favorite food is often things like jellyfish. We know that plastic bags, when they're out drifting in the ocean, very closely resemble the appearance of something like a jelly. So over time, the gut and the stomach of that turtle becomes filled with plastics rather than food. And eventually that turtle may feel as though it is actually no longer hungry due to its stomach being full of plastics, but when in reality, it's lacking any real nutrition. And so in that type of example, a sea turtle might starve to death because of having a belly full of plastics. Without swift intervention, we are going to see more plastic waste being generated. And if those trends continue like at present, more plastic going into the ocean. So we need to do something now. The time is now to take action. And while the numbers are overwhelming, it is staggering, 8 million metric tons of plastic entering the ocean each year. What we also know is staggering is the outcry of public support and outrage about this issue. We are seeing individuals, we're seeing companies, we're seeing governments, truly everyone on the global scale is now taking notice of this global problem of plastics in the ocean, and we're starting to see real action.
You know, you don't have to go very far. Right here in Mumbai, there is a lawyer called Afroz Shah who's been cleaning beaches, particularly Versova Beach. Every weekend he spends cleaning those beaches. And what he says is that it doesn't matter what he does, the plastic keeps coming back. What we have to do is control it from our homes. So do that and do continue watching Bloomberg Quint. Thanks so much.
How many places